Alrighty, thanks everyone for attending. I'm seeing a lot of familiar names, but also a lot of names that I don't know. So thank you for joining. This is a series of webinars that we've been putting on over the last few months. Specifically targeting the startup and tech sectors. This one today is our latest on software, specifically around the R&D tax grants and funding. The previous ones that we've done include, we had quite a lengthy one into funding for startups. We'll probably run that one again at some point if you're interested in that. We do other sector-specific presentations such as MedTech, those kinds of things, but all focused around software and tech startups helping entrepreneurs. So this, just our standard disclaimer at the start, this is not specific tax or legal advice. So if you are thinking of making any changes to your business or strategy on the basis of this, make sure you do ask your tax or legal experts, whether that's us or someone else. Always a good strategy. So that's me. I'm the R&D tax manager here at Fullstack. I've been involved doing R&D claims and grants for more than 10 years now. In Fullstack, we're a chartered accounting firm specializing in tech and startups, assisting hundreds of companies and entrepreneurs throughout Australia with tax, accounting, bookkeeping, grants, etc. So we're going to try and cover quite a lot today, primarily focused, as I said, around grants and the R&D tax. So we got quite a lot of slides. If you have any questions, please feel free to pop those in the chat, and we'll either get to them in real time, if applicable, or save them till the end, where there'll be a larger Q&A. So just a few things to note at the start. Because of the recent federal election, there is a little bit of uncertainty around a few of the programs that I'll mention today. Some of those digital games tax offset and patent box have been kind of introduced, but not yet formalized through legislation. So we're not 100% sure of those. I'll go in a bit more detail later. Some of the other schemes, such as the EMDG and the Boosting Female Founders, they are either on hold because they're currently processing applications, or the government is being briefed. So there will likely be some changes in some of those programs, but what those changes are, we're not too sure yet. So we'll be keeping everyone updated on those. There's also a new suite of R&D Tax Incentive Guidance that is being released sequentially over the coming weeks or months. And a lot of that will be specifically relating to software. So we will likely have further webinars or updates by newsletters, articles on our website, etc., when those become available. So here at Fullstack, we like to look at your kind of funding in a holistic way. So it's not just focusing on R&D tax and grants, or just focusing on VC, private capital investment. It's really getting the mix of all of those. There will be different stages where those will be more applicable, and there are obviously advantages and disadvantages to do with, government grants are kind of free money. People kind of view them as free money. Obviously, there's a time commitment there, but it's not diluting your cap table. But there are other advantages with the more traditional investment options, VCs, things like that, access to their expertise and networks, which should be appreciated as well. So kicking off with grants, I'm just going to run through a few of the main grants. Here's a grant snapshot. There are hundreds, if not thousands, of different grant programs in Australia at a federal and state level, and even a local level. So obviously not going to go through everything today, but we've picked out some of the more broad-based ones that are broadly applicable to most companies, and in particular software startups. There are some sector-specific ones on this on this slide that if you are interested in, if you're working in kind of in that sector or providing enabling technologies, then even though you're not, maybe not directly in that sector, enabling technologies may be applicable or maybe eligible for those programs. Now, just wanting to lead off with some tips for grant success. So these are just a bunch of tips that we've kind of built up over the years of providing these kind of grant services and interacting with the various agencies. Early engagement with the program administrators and facilitators is a must. You'll find that these days that the facilitators and the administrators are very keen to get in touch with companies even before they submit those expression of interest. That's kind of stage 1 forms. The reason for that is they do get a lot of people that apply that are just not eligible or they won't be competitive. So they're really looking to assist companies make those decisions earlier and focus on the areas of their business that will be more fruitful. So most recently with, a successful accelerating commercialization grant that we helped one of our companies receive, our clients receive, the first thing they did was talk to the facilitator that really kind of changed the whole scope of their proposed project, and ultimately they were successful. And that possibly wouldn't have been possible without that early engagement. Like I said, that holistic look at your various funding sources is key. So don't just kind of get focused on grants. Pursuing other sources of capital may be more appropriate for you. Grants typically, there are things that you have to do with the government that you may not have to do with private VCs and things like that just kind of extend the process and make it potentially a bit frustrating and hoops that you have to go through. Go after low-hanging fruit. So those broad-based kind of programs that are more entitlement programs. So the EMDG, the R&D Tax, if you're in New South Wales, maybe the MVP grant, those kind of smaller ones, smaller grants that are a bit more entitled based, it should be pursued kind of in the short to medium term, and then maybe some of those larger merit-based grants for those longer term projects. All these grants are about projects, so it's really about having very specific projects, milestones, budgets, people in place to execute on those, a strategy to execute on those. So you kind of can't go in half-cocked. You really need everything ready to, ready and waiting to be able to these larger grant processes off. Obviously, you need to understand merit criteria. Once you kind of get into the ecosystem, you'll find that the merit criteria are generally applicable across various grants. So once you kind of have that story and that supporting documentation built up, then you'll find that you can just, if something comes on board, a new program is announced, and you'll be able to quickly navigate to that. And you'll have a lot of the documentation already prepared, required for those. A lot of it is also similar to accessing venture capital and those kinds of things, like all the same due diligence and budgets. And things like that as well. So you can apply those where I'm not going to spend too much time on this. So 20K match funding for pre-revenue tech startups. You can, so all of these, if you just Google the kind of the name of the grant, it should be the first thing that comes up. So there are a lot of various criteria. So if you are interested, I'd recommend just going through that in your own time. So pre-revenue startups based in New South Wales. The submission for this process is just through the Service New South Wales. Also, I encourage you, if you're pre-revenue, to go in and have a look at that. And the assessment time is relatively short. An example of that low-hanging fruit that I was talking about. The CSIRO Kickstart is another good one. So that actually provides vouchers, so between 10 and 50K match funding. So the MVP, you kind of spend the money or get money up front and then are reimbursed. CSIRO, you actually get a voucher that you go and basically the grant funding goes directly to CSIRO or is spent within CSIRO. So it doesn't actually go through your books. That's a good one. They will, so that's basically to get an expert researcher or research team to conduct R&D for you. So it's worth engaging with them. It's a relatively simple expression of interest as well for that one. And the facilitator looks at that, and if you're eligible, and if it sounds good, then they'll get in contact with you and try and match you to a team within CSIRO that will be able to assist you. The AC grant, that's the one that everyone always wants to talk about with me. It's one of the big kind of broad-based ones. So up to $1 million match funding, 50-50 for our commercialization project. So projects between 1 and 2 years. The process can take quite a long time. So from expression of interest through to stage 2, about 6 to 12 months potentially. But given the kind of potential level of funding, it could be worth having a look at that. The eligible expenses are fairly broad. It's all about getting the personnel to assist you with the commercialization and making first sales of your, more or less developed product, process, or service. Something that isn't very obvious from the website or the published literature is that if you do go speak to a facilitator, they will tell you that they're not really interested in looking at projects that are less than $400,000, so $200,000 match money. So even though there's that lower limit of 50K, they're really not going to look at anything below that 200K matched funding mark. So project at $400,000. So keep that in mind. There's assessment criteria. So I put this on to kind of illustrate what the kind of criteria that is specifically applicable to the AC grant, but that it is generally applicable through most grants. It's the same kind of thing. So the impact of the grant, the need for funding, that's very important. So you need to be able to demonstrate that you've attempted to get the other half of the funding from other sources prior to coming to the government for assistance. You obviously need to show broader economic benefits. So that's things like export replacement, jobs, providing employment opportunities. Regional areas also get additional kind of points, supporting the regions, building manufacturing facilities, those kinds of things. A lot of grants also have targeted growth sectors, so you'll get additional points if you're working within one of these sectors or providing enabling technologies to one of these sectors. So you can see those on the slides. Management capability, you need to kind of have most of the team already in place or have identified the people that you need to be able to execute on that already. So these aren't, these aren't to pay for speculative, tasks and activities. They're to fund things that are already kind of locked in, and you just need the other half of the funding. So you need to demonstrate that if you are provided these funds, and you can actually execute on your strategy in the project. Market opportunity value proposition, obviously very important, and how you plan to deliver your project, that kind of comes down into that market management capability and that execution strategy. So having all that ready in place. These are the kind of documents. So for accelerated commercialization, you'll be expected to provide every one of these documents, and probably the top 4 or 5 you should have in place, I think, already before before investigating whether you should, well, certainly before starting preparation of an expression of interest for the accelerating commercialization grant. The companies without those things that start that process are really just on a hiding to nothing. I think you kind of need everything in place, ready to go. The boosting female founders. So this one is currently, so the round 3, so this one goes in rounds, as does the accelerating commercialization. So basically you're competing against other companies for a fixed pool of funds for that round. The boosting female founders is currently on, they're assessing round 3. I believe that round 4 will will start after round 3 has finished. This is one of those ones that I wouldn't be surprised if the new Labor government makes some changes to it. I'm not sure whether you've seen some of the commentary on this, but it was heavily oversubscribed in terms of people applying compared to people that were successful in those early rounds. I think it was something like 1 in 20 or 1 in 30. So there were a lot of people doing a lot of work that ultimately was not fruitful. So they're looking at strategies to assist with that. So they've changed the application process to an initial expression of interest, and then if they like what they see, then they'll invite you to a larger stage 2 application. But in terms of the kinds of things that you have to demonstrate, it's fairly similar to the accelerated commercialization. You'll see if you read the 2 guidelines side to side, then often they're quite similar or even use the same kind of language. So there's, as I mentioned, there are the two kind of stages in the application process for that grant. EMDG, this is a program, so export market development grant, that has been going for years and years and years. Last year, the 22 financial year program changed from a kind of retrospective reimbursement program to a more prospective program. There were some issues with doing that in the year, where it was partially retrospective and partly prospective. It was heavily oversubscribed, so you can get up to 50% of eligible export market development costs, up to certain caps depending on your stage of your export journey. Companies were probably erroneously expecting to get the full 50%, and I think companies only probably got 20% of what they were expecting to get. So it's caused a bit of issue there. The program is not kind of fully funded. So the program is currently on pause while the new incoming Labor government is being briefed, and not really sure what changes may come out of that. Hopefully they're just going to boost up the funding for that one. So there are those eligible expenses you can claim under that. The major ones there are probably the promotional and advertising material. So that covers things like that can cover things like ads using Google AdWords, LinkedIn, Instagram, Facebook, those kinds of things. So obviously for software companies, that's one of the larger areas of expense for export market development. Also maintaining representatives in foreign companies, getting various consultants to assist you in your export strategy, intellectual property rights as well. So it can potentially cover the cost of patents and trademarks and things like that as well. So there is a process there where you submit your application. Once everyone submitted their applications, they calculate what the total eligible expenses are, and then if that's higher than the total pool of funding, then they pro-rata it back to, so they give everyone, rather than getting 50% of eligible costs, they might get the 20% of eligible costs. If that's the other way, then you would get the 50% if the pool of funding is greater than the total eligible expenses. So other incentives, maybe I put in brackets there. So I did have the patent box legislation in here as well, but I took it out because it's not really applicable to software at this stage. And anyway, it was introduced prior to the election, but it was the other one. So that has the exposure draft legislation has been released and consultation has been conducted on that before the election. So nothing actually got put before Parliament. So we're not really sure what's going to happen with that one. That was going to provide a 30% refundable tax offset. So similar to the R&D tax incentive that I'll get into, you could get a cash refund if you were spending more than $500,000 on developing a game, a video game, essentially. Now, yeah, so Austrade, I noticed Austrade, who administer that program, did have a press release relating to a specific company, just one of those kind of user stories that mentioned that they were looking forward to the digital games tax offset and that would be an integral part of their business. That was released a few days after the election. So I think that was probably just a timing thing rather than an indication that it was going to continue, but I thought it was interesting nonetheless. There's, to my knowledge, been nothing released on that since the election. But certainly something to keep in mind. Also, that's all the kind of grants. Now we're going to move on to R&D tax, which often gets called a grant, but is not. It's a tax incentive. The other thing just to mention is grants are generally taxable income. So that's something you should factor in as well. If you are successful in receiving grants or looking at those, you will have to pay tax potentially on those amounts received, or they're certainly going to be assessable income in most cases. So R&D tax is not assessable income. It's an adjustment to your tax position kind of afterwards. The R&D tax is the government's broad-based scheme to incentivize R&D in Australia. I'm going to kind of race through the general eligibility criteria and then get to the new software-specific guidance that's been released. So looking at the list, a lot of you probably are claiming already or know all this. So just bear with me for these next few slides and we'll get to the updates quite quickly. So R&D tax creates just a very useful cash injection for loss-making startups, generally for the first few years. It can also assist with other programs such as receiving points for the early stage innovation company concessions that will provide your investors with benefits, which I will get to as well. So it's important to understand how the offset works. So it's a refundable tax offset. So that means if you have enough losses, so if you have losses that are greater than your R&D expenditure for the particular year, then you would receive the full 43.5% back as a cash refund. For profit-making companies, you will basically pay 18.5% less, 18.5% of your R&D expenditure less tax. So it is useful for both profit-making and loss-making enterprises. Just good to understand kind of the interaction there as you potentially move to a profitable position. So the R&D tax legislation is all based around a core R&D activity. So you must be conducting a core R&D activity in the year that you want to claim. A core R&D activity has a few different requirements that are all kind of combined together into one definition. Core R&D activity is an experimental activity that is conducted within an area of established science. So you need to be pursuing a scientific or technical objective rather than a kind of a commercial or business objective. Obviously, those two things are quite intertwined sometimes, but the focus of the research and development contemplated by this program is really on technical and scientific innovation. You must establish that you've followed a systematic progression of work. So we talk about having a hypothesis, experimental steps, and logical results and conclusions for that one. So again, in that kind of scientific method. Core R&D activity must be conducted for the purpose of generating new knowledge. So they can be in the form of new or improved product, process, or service, material, etc. It doesn't necessarily have to be the whole thing. It can be a component of a broader product or process service. And then equally as important as all the other ones, but this is one of the ones that I focus most on, is the outcome could not have been known or determined in advance. So would a competent professional have been able to develop what you are proposing to develop without conducting a systematic progression of work, aka core R&D activity? So where you're potentially using third-party tools and technologies purely in the way that they're intended to be used, even though you might be developing a new product or process or service, that it might not meet that kind of technical uncertainty that's required. and I'll go into that in a bit more detail. So quickly, some other requirements. Activities conducted in Australia are eligible. Ones that are overseas are not, although in some circumstances where you can demonstrate that they could not be conducted in Australia, you can go through a process to also be able to include those. Generally, software is more difficult to make that argument because most people go overseas for software development for a cost because it's cheaper rather than because the expertise isn't available in Australia. Although some companies have been successful in making that argument. So you can only claim activities conducted for you. So that's where you own the IP and bear the financial risk of carrying on those activities. So you're paying for those activities essentially. You must spend at least $20,000 and per year that you want to claim. And you must have a company structure. So it's not available to partnerships, sole traders, or trusts. So broadly, most categories of expenditure are able to be included. Salary and wages and contract costs form the vast majority of costs for software companies. You may also be able to claim things like subscription costs that were purchased for use in R&D, the rent and electricity, internet, those kinds of things as well, where you can demonstrate that there's a link to the conduct of the core R&D activity. So there are a list of excluded core R&D activities. This should read areas to watch out for in software. So these are activities that are not core R&D activities because they're on this list. So market research, market testing, market development, research in social sciences, arts and humanities, some patenting and licensing, development of computer software for internal administration purposes, which I'll go into in a bit more detail. You also need to ensure that any amounts incurred to associates, so generally the co-founders, major shareholders, directors, are paid prior to the end of the financial year if you want to claim those. Ones that are not paid can be carried forward. So software has been fairly contentious in terms of the R&D tax incentive. There's a real kind of, historically, there's been a big tug of war between the government and what they perceive to be R&D in software, and what industry perceives to be R&D and what they think should be supported, I think, at times. And in the middle, we have the legislation. So ultimately, you need to comply with the legislation. That's fundamental, obviously. I think in the last few years, both sides have gone, made errors in their judgment. So it's always good to refer back to that legislation. At the moment, we're in an area where we're at a stage where there's not a lot of compliance work going on, partly because of COVID, partly because of those historical kind of fights that occurred. The new software, guide to software R&D has been released in because of those historical issues where the government has got together with some of the larger software development companies in Australia, Airtasker, Canva, Atlassian, those kinds of companies, and industry, or they both kind of educated each other on what is and is not R&D, specifically relating to the R&D tax legislation. Cool. So a big part of that is probably industry describing R&D as their conception of what research and development is. Development of a whole service, let's say, or a platform, and even commercialization aspects of that. R&D tax is a lot narrower than that. So you really always do need to, as I said, go back to the legislation. One really important thing, and this is kind of our first, or a big pro tip. So you really need to consider the entire core R&D activity definition when you're making that determination as to whether you're doing R&D or not. Developing a new platform, let's say, alone, even though it might be new and significantly improved on your competitors or what's available, that does not mean in and of itself that you have an eligible core R&D activity. You also need to make sure that you identify the area of established science you're working in. So the unknown that you're trying to resolve needs to be in a technical area, like I mentioned earlier. It's not around, can we make this a viable business, or can we, make money off, this platform somehow, or that kind of area. It's, fundamentally whether the technology functions as intended. And I will provide a bit more insight into the areas of computer science you may be working in a further slide. It's really important as well to ensure that you can establish why or how the outcome of the activity could not have been known or determined. So, like I mentioned earlier, if you're using third-party tools and technologies, you need to identify the specific knowledge gap that could not have been resolved without conducting experimental research and development in the area of either computer science or some other area of science that is not an excluded core R&D activity, or to do with resolving business or business commercial uncertainties. So that's key. So this next slide is an excerpt from the Frascati manual. So the Frascati manual is the OECD guide to research and development. Most countries in the OECD have some kind of R&D grants or tax program, and most of those are based on the definitions in the Frascati manual. Now, the Frascati manual has a relatively recent addition. Actually, it's not that recent, but it was included after our R&D tax legislation was introduced. So our R&D tax does not have specific definitions around software in it. If you read it in full, it's very, or if you look at the core R&D activity definition, you'll kind of see it's very, more kind of traditional science like physics, chemistry, engineering, those kinds of things. So the new Frascati manual has a section on what R&D is, specifically around software, and those 5 points there are the areas that they identify as potentially involving R&D. There is a list of tasks or activities, areas of work that the Frascati manual notes are not R&D in and of themselves. That should probably read in and of themselves. So those kinds of things may be part of an overall core R&D activity, but just conducting one of those will not constitute R&D in and of itself. These are more likely to be supporting activities. This next slide is a new addition to our ANZ SRC, the Standard Research Classifications. So if you are saying that you're working in an area of computer science in your application form, these are the different areas that you can be working within. This is a lot expanded on the previous version. So if you have lodged last year, it would have been the old version. This year is in 2022, financial year 2022. There are the updated codes, and you'll see that there are additional ones, and they split some out. Like machine learning is a new inclusion in this, for example. So these are the areas of computer science that you might be working in. It's worth actually just tracking this down and having a bit of a look and a read to kind of really see what classification your research is in. Each of those also has a list of excluded and areas that are excluded. These are just some examples for illustration sake. So you'll see that where you're potentially developing computer software, but the kind of uncertainty that you're trying to resolve is in some other area, then the area of research that you're working in might actually be not computer science. It might be, electronics or health services or applied computing. That's obviously still software, but it kind of gives you that illustration that you might, technically you might actually be working within a different area rather than computer science. So it always is instructive to really kind of think about that. Where that would potentially come into play is where you are in a negative way, is where you're maybe doing some work, and the ultimate uncertainty that you're trying to resolve is in an area of business, economics, education, psychology, or some other area of research in the social sciences, arts, and humanities. So it's really important just to be able to identify what that scientific area you're working in, because that could be the difference between your software, the development of your software platform being, eligible R&D or not, an eligible core R&D activity or not. Market research, market testing, market development is also excluded as a core R&D activity. Internal software, so developing software for internal purposes is also ineligible. So if you're developing a SaaS platform or something like that, and people are, ultimately going to, buy subscriptions from that, then that obviously won't fall into this exclusion. It's more if you're developing an internal, payroll system or something like that. So I'm just going to quickly, we're running out of time, so I'm going to try and speed through some of these next slides. I think I've already covered that one. You really need to identify the specific area of science that you're working within. Classify your projects accordingly. So generally, a whole of platform claim will not be sufficient to demonstrate eligibility. You kind of need to break down your activities into smaller core and supporting activities. There is also a requirement to be able to substantiate your claim. So on the way through, it's self-assessment. You fill out a form that gets lodged, registered. You put in an R&D tax schedule as part of your company tax return, and you will receive a refund. That does not mean that you are eligible at that point. It just means you follow the administrative process. So you do need to, if you are reviewed or audited, have records to substantiate your claim. And you can be reviewed or audited up until 5 years after you made a claim. There is the guidance now is pretty good. If you look up the guidance, the different kind of records that you might need to keep for to substantiate your R&D activities on the technical side and your the incurrence of costs on the financial side. Evidence, not explanation, is always my kind of catch cry. So if you do ever get into audit or review activity, you want to provide evidence, not try and explain it. So if they say, well, demonstrate that the purpose of conducting this activity was to generate new knowledge, having some board meeting minutes or, a project plan or something that specifies that that has a date on it, that sometime in the past is better than trying to explain those kind of post hoc. So the new software guidance, I would recommend everyone to review this at their own leisure. It is actually a requirement to do so now when you are making a claim in software or other areas that have their own guidance. It's part of the process now for submitting the application form to declare that you have reviewed this sector-specific guidance. So these are just copy and pastes of some of the new information that is in the latest guide. There was a draft guide that was out for quite a while. So I would encourage you in your own time to review these in detail. But this is quite a handy list of, it's not perfect, this guidance. I think there are still some potential issues with it, but it should give companies a lot more idea of whether they are conducting eligible R&D or not, as per the R&D tax incentive. So these are some questions or considerations to make in the assessment of whether there is a technical or a scientific unknown. So that kind of contrasts to a business or a commercial unknown. The competent professional test has been reworded. So the competent professional is this idea of someone that has experience in the particular field, in the domain, the scientific domain that you're working in, and that has access to the information and experience that is publicly accessible, publicly available, or reasonably accessible. So what would a competent professional in the particular field be able to produce without going through a similar process of systematic progression of experimental research and development that you're required to do? So if you can go down the street to a developer and say, hey, can you build this for me? And they go, yep, no worries, we know exactly how to do that. Then even though it might be a new product or a new platform or something like that, then it might not meet that requirement that the outcome is unknown or unable to be determined in advance. There is a list as well of software tasks and methodologies that may be part of your core R&D activity, or sorry, part of your R&D project. Some of the language in the old guidance was much more negative on some of these, saying that they are not R&D. The new one says they may be part of an R&D process, but again, one of the doing these in and of themselves are not R&D. You need to contemplate the full definition of a core R&D activity. So I'll just quickly blast through these last slides before we get to some questions. Thanks everyone for their patience. So R&D financing is something to have a look at if you're not already aware of this. Basically, it allows you to bring forward your R&D, your refund. So rather than waiting till the end of the financial year, submitting your paperwork, getting the refund from the ATO, there are financiers who will lend you a portion of your offset that is going to come at the end of the year. So this works really well when you, let's say, have associated with accessing that funding. Yeah, something to keep in mind. ESIC as well. Again, we're not going to go into this in a lot of detail. This is available for investors who make a qualifying investment in an eligible early stage innovation company. So there are a number of tests that must be satisfied. The early stage test is one of those series of tests, and the innovation company is another of those series of tests. The investors have their own tests as to whether their investment is eligible. So they need to do a bit of homework there to determine whether they're a sophisticated investor. But those concessions are very valuable, and a lot of investors now are, asking companies to demonstrate that they are early stage innovation companies before that investment is made. 20% non-refundable tax offset up to $200,000 per year, and a CGT-free window for investments held between 12 and 10 months can be quite substantial. So there's potentially a little bit of work to do to make sure that you qualify, or to determine whether the company qualifies for an early stage innovation company concessions. It is also a self-assessment regime, but some companies will like to get a ruling from the ATO, or some investors might want to get their companies to get a ruling from the ATO to confirm their eligibility on certain aspects of those various tests. The test time, so you need to make a test as to whether you're an ESIC immediately after a qualifying investment is made. So that will change year on year, potentially whether you're an ESIC or not, or even within a year, there might be a time where before a certain action is made, you're not an ESIC, but then after a certain action is made, you are an ESIC. So it's just important to understand that timing as well. So that brings me to the end of the content. So just quickly on the services that we can provide. So basically anything to do with today's presentation and the services that you imagine will be aligned with those we can do. So R&D tax incentive preparation, EMDG, other government grants as well. We have some really good experience in that. The early stage innovation concession, assisting with the tests and the reporting of that as well. And then we have all those other complementary services around bookkeeping, tax, financial advisory, those kinds of things. So there are our contact details as well. So feel free to reach out if you have any other, if you would like to discuss further.